Welcome to the Specialist Trading Weekly E-mini Review for the week ending October 22nd, 2010. Now in today's review, we're going to speak about trading strategy number 3, which is a great strategy. The only problem is you don't see it as often as the other strategies. So one way to get around that is to go down to smaller time frames. So we're going to show you how to trade strategy number 3 in a smaller time frame. But before we begin, we ask that you once again view the Global Futures promotion that we're currently having with them. Global Futures is a highly recommended firm, and if you're new to futures trading, or if you're not too happy with your current broker, we highly recommend that you switch over to Global Futures. They have very competitive rates, excellent service. They've been my broker, and if you speak to Michelle Jimenez, the premier broker there, and you mention coupon code SB20, you're going to receive 20 free contracts. And also mention Specialist Trading. And so you can contact Michelle Jimenez at 818-670-7733, and that's calling her direct. Once again, mention the coupon code SB20 as well as Specialist Trading, and you'll receive 20 free contracts, 20 free trades when you open and fund a new account. Okay, before we begin this week's review, we ask that you take a short second to view our disclaimer. I'm going to show you performance results from trading the E-mini with strategy number 3, but remember, we can in no way guarantee that any of the results I'm about to show you will be repeated in the future. So please take a moment to view our disclaimer, and then we shall begin this week's E-mini review. Okay, as stated earlier, we're going to be covering how to trade strategy number 3 in smaller time frames. As I said, it's a great strategy, however, you do not see it as often as the other one, strategy number 1 or strategy number 4. So one way to get around that is to go to a smaller time frame, such as we've done here. This is a 3-minute chart of the E-mini going back to last week, back to Tuesday into Wednesday. Okay, and what we want to do is take advantage of going short here at the high of this little bounce, and then on to the next day of going long here at the bottom of this little sell-off. But how could we have done that? Looking back in hindsight, it's easy, but how could we have done that? Well, it's really not as difficult as it seems. If we're trading strategy number 3, we have to add our one main indicator, which are the Bollinger Bands. But there are proprietary setups to the Bollinger Bands. They're not the common Bollinger Bands that you see. There's some simple editing and some simple changes you have to make. Very simple, take you 2 seconds. Just go into your edit box and make the different length changes. Once you've done that, you come up with our proprietary setting. If you're not familiar with that, simply go to the video learning section where we tell you how to do that really easily. All right, so we've added our proprietary indicator, the Bollinger Bands. And once you've done that, then we have to see, well, are we going to go long or short? Well, the first thing we ask ourselves is, where is price in relation to the buy-sell line? Now, the buy-sell line is our 50-period simple moving average. And if we ask ourselves that right off the bat, we see that price is below. So this means we're only going to be looking to go short for short setups, because we cannot go long if our entry, or I should say, we cannot go short if our entry is above the buy-sell line. That would mean a long trade. And vice versa, we cannot go long if our entry is below the buy-sell line. So we have to look to go short. So now it's easy. Now if we know we're going short, we just look for the setup bar. Now, the setup bar is a bar that meets certain requirements that will have, these requirements met, that will tell us that, we simply have to go short once we've found that setup bar. Okay? So here's the setup bar, following all the requirements that are met, that are needed to go short. We found the setup bar. None of these bars here below are setup bars, but this is our setup bar right here. So what this means is, once we found it, if we trade one tick below, such as right here where this red horizontal line is, that means we can go short. As you can see on the very next bar, we traded one tick below, so we entered short at 1161. Now once we're short, we don't think about a profit, we think about what happens if it's not going to work out, because not every trade works out. So you place your stop and protect yourself right at the high of this little rally here. Okay? We had a little bounce, and once we've entered, you place your stop just above the high of the bounce. And now you simply wait. You wait for the trend to resume on its downward course, because we're now in a downtrend. And the initial exit is to cover your position once price closes below the lowest Bollinger Band. All right? And so once it closed below, you could have taken a quick profit at 1159.75 and made a quick point in the quarter. Now, remember, we're trading 3-minute bars. Once you go down to a smaller time frame, your risk-reward ratio is really decreased. In other words, your risk won't be as great, but your rewards won't be as great as well. So we're looking for these small little nuggets here. We're not looking to get 5, 6 points at a time. We're looking for maybe 50 cents to a point. So this is a nice quick trade. If you wanted to take advantage and hopefully you were able to squeeze a little bit more out of this trade, we teach you how at Specialist Trading to take advantage and possibly cover your short down around these levels. Okay, so that was your first trade using strategy number 3 in a smaller time frame with the proprietary Bollinger Band setup. Now let's go back and we see here that the next day has started. Now we're looking at the 20th on Wednesday. Okay, and look what's happened. Price has now risen above the buy-sell line. As you can see, here's our buy-sell line, and price is now above it. So what does this mean? This means now that we can't even consider going short, we have to consider going long. So we're looking for long setups, and the way to do that is to find our setup bar. So we've studied the tapes, we've gone back to the video learning library, and we know what a setup bar is, so we look for that, and we find our setup bar right here. As you can see, circled in green, this is our setup bar. So all of these bars prior to it were not setup bars. Nothing was a setup bar until we found this bar right here. And once we find that, we know that this determines if we can go long. If we trade one tick above, right where this green horizontal line is, we can enter and go long the trade. And as you can see, we did on the very next bar. So we entered long at 1166.75, and the first thing after you enter is you protect yourself by placing a stop just below the low of this sell-off, okay? So you've entered here, your stop is here, and since we are in an uptrend, because we're above the buy-sell line, we simply wait for price to rise and close above the highest Bollinger Band. The very first bar that closes above is our initial exit, and you would have exited at 1169.50 on the opening of the next bar. So you would have made a quick 2 3/4 points for being in the trade roughly about 9 minutes, 3 bars. Okay? So in the first bar, you were in there roughly about 10 minutes. You made a 1.25. This bar was a little unregular. You made nearly 3 points, and unregular in the sense that we're not, usually accustomed to seeing anything over a point, 1.5 when we go down these smaller time frames. 2 3/4 points. That was a nice little move, and for being in the trade roughly 3 bars or 9 minutes. So for both of these trades, we were in each day for no more than 10 minutes at tops, and we made roughly 4 points in 2 days. Okay. So let's recap. On Tuesday, the 19th, going into Wednesday, the 20th, we used strategy number 3 on a 3-minute chart. On Tuesday, we made a 1.25. On Wednesday, we made 2 points and 3/4 to 2 3/4. So see how simple it is, how basically easy for being for no more than 20 minutes of trading for 2 days. You made 4 points. Now, it doesn't seem like a lot, but if you're trading one contract, that could have been over $2,000 by the end of the month, simply trading one contract 10 minutes a day. Okay? That's why we ask you to learn these strategies. And we want you to learn them like the back of your hand. Go to the video library, pick a strategy that fits comfortable with you. And we have numerous strategies to pick from. This is one of them. We have strategies 1, 2, 3, 4, and 5. There's many more coming along the way. All strategies that are meant to fit your temperament but follow the basic guidelines and the basic concepts of techniques of specialist trading. And once you pick 1 or 2 that you feel comfortable with, then paper trade them. Do not put your money into the market yet, because there's a lot to learn once you see the process unfold in real time. Our edge here is consistency. We want you to learn these strategies, pick 1 or 2, and then simply trade them. Over time, you'll get this edge of consistency. As you see here, we just made 1, 2 points each day. That's fine. You do this over time, you build up your account, you're going to be making a nice income each and every month out of this little consistency. We're not going for home runs, we're going for singles. So what we want to teach you are these nice, consistent little strategies that over time will generate some nice monthly profits. If you have any questions concerning what we went over or anything on the website in the video library, please contact me at stephenprimo@specialisttrading.com. And lastly, in closing, we ask that you take one last view at our disclaimer. I showed you some performance results last week, trading strategy number 3. But remember, we can in no way guarantee that any of the results we showed you will be repeated in the future. We ask that you have a great weekend. Remember, if you have any questions concerning this video or anything on the website, please do not hesitate to email me, and we'll see you right back here next week. Bye-bye.